Testing. Sound check, sound check, sound check, sound check. Sound check, sound check. 38%. Wow. Sound check. Hello, guys. Welcome back. 38%. Welcome back, guys. Okay, just a moment, just a moment. All right. We have Sandy. Hello, Sandy. Bang Bang Sandy. Nice to see you again. We have 36 viewers. Happy Friday, guys. How are you doing? Everyone here? Well, guys, it's almost Chinese New Year Eve in Malaysia, Kuala Lumpur, and it's traffic jam around the city, guys. If you're from Kuala Lumpur, you know what I mean. Like these few days in KL, it is so jammed. You go to Petaling Jaya, you go to the city, everywhere is just packed with cars, I think everybody is just busy to buying their, Chinese New Year groceries. Anyone here in the chat is actually preparing, anyone local Chinese in Malaysia? Are you guys from Malaysia? Anyone from Malaysia? Click yes. Click happy CNY. Anyone is preparing for happy CNY right now? Well, Chinese New Year is gonna be like today's 13, I think. Yep. Chinese New Year is gonna be at 17 and 18, which is the most happening, days in our season. And during 16 is where all the traffic jam is so tight, where everybody is just going back their hometown and spend their time with their family. So yeah, it's Chinese New Year Eve. Hi Jax. So um well, I wish you guys, happy festive season, really. Smooth trading, and more importantly, before we trade, before we scalp, before we analyze the market, what I want you guys to do is to tell yourself something very important. It's called condition over conviction, right? Condition over conviction. Say it one more time again. Condition over conviction. So conviction is very easy. Conviction is, when you feel so sure that you want to enter the market, you want to go in, and then you see there's a price action moving, hitting that levels, and then you have that kind of impulse that you want to like click the buy, you want to click the sell. I understand that, right? But those are conviction. Before you have that kind of conviction, the most important thing is to ask an upstream question. Is this condition, right? So today I'm going to teach you, how can you really create the condition to foster the possibility for you to make a profit in the market, right? So before Chinese New Year, if you're Chinese, we all know we want to have a great Chinese New Year. You and I, we want to have a great Chinese New Year where we can go back to our families, to our parents, to our brothers and sisters and friends with our pocket, not filthy rich, but you get what I mean. You wanna have a thick pocket where you can go back to your hometown, not because you want to show off. It's just because that you can provide, right? Go for a few beers with your family, go for a few drinks with your family. You want to treat your family for a good dinner. You need money, right? We all need money to do that. And if you burst your account, you losing few thousand US dollar before that, I don't think that's a good idea. Agree? So what I want you guys to do is to really, understand, no matter how excited we are in the market, we need to understand every conviction is fragile. Every conviction that you feel is just human impulse to want to make quick money, quick buck before, before the condition arrive. So what is the most important thing is that you need to understand what is the condition first. All right, guys, we have Sandy, Jax, Carlo, Alan, Jax, Abu Kabar, Sheikh. Hello, CG. I'm here for you again. Thank you. Welcome back, Abu Kabar. Welcome, Evander. Welcome back to our class. We have 40 viewers right here in the live chat. I know some of you guys are from Hong Kong, some of you guys are from Australia and from Singapore, Malaysia. Anyway, thank you for spending the afternoon session with me. Today is a very unique day because today we have two sessions, right? So I'm gonna be at session from 4 p.m. Malaysia time to 6 p.m. And another session would be from 9 p.m. to 11 p.m. because you know why? We will have consumer index report, right? So I'm gonna review that to you guys a little more later, right? So you know how I will. I always try to teach you guys something before we start our session. So right now, let me click the record button. Okay, guys, we're gonna start our session. If you guys are ready, please click yes in the chat box to show me that you guys are ready for this session. Are you guys gonna learn something? Are you ready to learn something? Show me the excitement. Click yes in the chat box. All right. Okay, cool. Let me see. Lavender is typing. Okay, guys. So welcome back to Profit in Peace. Profit in Peace is actually a trading system that I developed to teach and coach, students that want to become a professional retail trader, and so that you can make some money to ease your financial burden in your daily life. I understand that not all of us can be a professional trader. I understand that not all of us have the resource and time to become a multi-million trader that become driving a Ferrari. I understand every single thing of that because me myself, I'm born, raised, self-taught retail trader as well. So for me, I understand every pain that you've been through. I understand there are times where you only have $50 or $100, and you want to really protect that small capital so that you can grow it. So for me, my top priority in my teaching philosophy is to make sure that you guys can profit in peace. Okay. To me, survival is much more important than making a quick profit. So that is why I developed this trading system. It's called Profit in Peace, where I coach people went from survival, engineer, and strategy. Okay. So without further ado, let's dive into one of the contexts that I'm going to share with you guys today. Now, I want you guys to understand every time when we trade, right? Are we actually making predictions? Are we making forecasting? Now, what I want to tell you guys is this one. We don't really do forecasting. A lot of you may think, as a trader, we should forecast. As a trader, we should actually know what's going to happen in the future. But the truth is, we are humans. We are not God. When you are human, you need to understand we will always be navigating into the future with limited and incomplete information. Do you guys agree? Now, if you guys understand what I'm trying to say, you understand that if we are destined to don't have any perfect information, we will always navigate in incomplete information, and we will always be late when the important windows open. And then you got a very clear conclusion on what I'm trying to tell you. We humans are very, very bad at making prediction and forecasting, right? So now you may ask, like, as a trader, right? If we cannot predict, if we cannot forecast, then how the hell do we trade? How the hell do we make money? Like CG, if we can't predict, if we can't forecast, how can you know that it's going to go bull or go bad? Well, what I want to tell you is something very simple. We don't forecast. We have absolutely zero idea where is it going to go bull or bad. But what we trade is actually something we call hypothesis. Okay? We don't trade predictions, we trade hypothesis. Okay? I want you guys to really pay attention for this class that I'm teaching you right now, right here in this moment. Because if you don't understand what is hypothesis, it means that you can't really become a profitable trader. Okay? Now, first thing first, I want you guys to understand what is a hypothesis, right? A hypothesis is not a guess, okay? It's not a guess, okay? It is a structured assumption. A hypothesis is a structured assumption, right? So it basically say this: if this condition appears, a specific reaction is likely until proven wrong. So what does that mean? Well, it means a single kind of pattern that is always happening throughout the cycle, the regime of the market, to a point where it seems like there's a cycle that is always repeating itself, right? And then we have assumption. So I want you guys to pay attention on this one. A lot of time when we listen to hypothesis, we will think that, wow, it is something that is so sexy and so hard to understand. I don't understand what is a hypothesis. So guys, hypothesis is not that is not that complex to understand. What I want to tell you is that you use hypothesis every day, right? You use hypothesis every single day in your life. Okay, for example, when you bring an umbrella, right? Why do you bring an umbrella? Okay, you bring an umbrella, there's only two reasons. Okay, reason number one, you walk out to your house and you look at the sky, it is cloudy, right? It is cloudy and then it is dark, but it's not rainy yet, and then you bring an umbrella. Well, that is a hypothesis, right? Because the sky looks dark, very high probability that it is going to rain. But have you guys really encountered before? Even though, you know, it's windy, it's very dark, but still there's zero rain, right? Anyone experienced that before? If you really experienced that before, please click yes, right? Have you ever bring an umbrella, go out and not a single drop of rain, right? This is something I want to tell you. So this is it means that hypothesis is not like perfection. Hypothesis is not something that is perfect. You get what I mean? So for example, another example for you to understand what is a hypothesis, right? When you text someone, okay, when you text someone and you expect a certain reply, you expect a reply, but that guy or that girl, well, it is not it is not 100% sure that he or she will reply you, right? But you expect a certain reply because most of the time he or she will reply you, right? That is a hypothesis. And when you take a shortcut, right, because traffic should be lighter, if you take a shortcut, you know, during like 5 p.m., 5:30 p.m., if you're in KL, in Penang, in big city, you understand what I mean, right? You want to avoid the traffic. So you go to a shortcut, okay? And then because you assume that it should be lighter, but that's a hypothesis, okay? So you didn't predict the future, okay? You form an assumption based on the conditions. So what I want to tell you is that I want you guys to really understand something. You use hypothesis every day, even though that hypothesis is incomplete, even though hypothesis is imperfect, right? This is what I want to tell you. So when you use hypothesis, there's only two ways to really understand what is a hypothesis. There's only weak hypothesis and strong hypothesis, okay? So I'm going to show you what is a weak hypothesis. A weak hypothesis is, I think it will go up. Okay, I think it will go up. Okay, it feels bullish. It feels okay. No clear entry or exit level. Okay, decision making, everything is hope driven. You use hope. I hope that it can go bullish. I hope that it can go bear. I hope that I hope that it won't hit margin call. So this is very, you know, weak hypothesis. You don't fucking hope. You don't hope for shit. You get what I mean? When in trading, if you use hope, you're on your way to account burst. Okay, that is what I want to tell you, right? A strong hypothesis. What is a strong hypothesis? A strong hypothesis sounds like this. Now, if price reaches this level, usually it reacts, but it didn't react, but usually it reacts, okay? But I'm going to use this as a reference point. So this is a strong hypothesis, right? A very clear entry zone, okay? A very clear stop loss, okay? Very clear target for profit. So I want you to understand there's a difference between weak, all right, weak and strong hypothesis. Weak hypothesis sounds like hope, all right? Strong hypothesis is condition, okay? You look at the chart, you look at this, you look at that, gather all the information, and then you think, okay, I think I should hit buy. Why? Because you have a condition. You're thinking from condition. You're not thinking by feeling. All right? Everyone still with me? If you're still with me, click yes in the chat box. I want everyone to pay attention because this is very important for us when we're going to do some live trading, live scalping together. All right? Okay, now the next thing. Now, the next question would be, what is the strongest scalping hypothesis, right? You have swing traders, you have day traders, you have traders that hold position for weeks, you have traders that hold position for months, and then you have traders that hold position for seconds. Okay, 5 seconds, 10 seconds, right? And you have traders that hold position for 5 minutes, right? So I want you to understand, no matter what time frame or what style that you are trading, you use hypothesis as an anchor point to support the way that you trade, right? So if there's a hypothesis in every single style, it means that even scalping, okay, has a strong hypothesis as well. Now, I want to ask you guys, do you guys want to learn what is the strongest scalping hypothesis? I want to feel the excitement from you guys. Do you want to learn what is the strongest scalping hypothesis currently proven by my own trading experience, but also by the entire big data of the financial market, right? If you want, please yes in the chat box. Okay, I want to feel the excitement. CZAC says one. Are you from Binance? Are you from Binance, CZAC? I don't know the owner of Binance come to watch my show. Wow. Right, so we have friends. So thank you, CZAC, for responding. Thanks, Kashbi, to responding. Yes, I need it. I know that you need it. I need it as well. So, okay, so I'm going to show you guys the strongest scalping hypothesis available today, right? I need you to pay attention on this word right here. Okay, I'm going to type it. Okay, it's called price react when liquidity concentrates, right? Price reacts when liquidity concentrates. There's always a line that liquidity is absorbed. There's people that are holding position in this line, all right? So price reacts when liquidity concentrate. CZAC say that I hope I am, but I'm not. Well, it's okay. We're on our way to become your very own CZAC, all right? So in scalping, the highest probability trades occur when price reaches, okay? It reaches what? It reaches the previous high and lows, okay? The previous high, the previous low. Okay, in scalping, the highest probability trades occur when price reaches previous high and low, the highest of highs and the lowest of lows, all right? And the second would be obvious, very, very obvious support and resistance, fucking obvious, okay? And number three would be sessions high and lows, okay? When it's opening, market opening, market closing, session high and lows. And number four would be higher time frame key levels. All right, now let me take some notes down, because sometimes when I teach, me myself is also learning at the same time. There's something that I need to note down. Just a moment. Sometimes when the thing I love about teaching is that teaching allows me to become a student myself again, so for me, sometimes when I teach you guys, I have some idea, I would just note it down, because I think that next time I can actually teach better. So bear with me. If sometimes when I teach and I stop and I pause and I write something, I want you guys to bear with me a little, because this is actually, part of my personal pleasure of teaching. I really enjoy that, because when you teach, and then sometimes you learn something new yourself. Okay. So yeah, don't tell anyone. That's my secret of trading, of teaching. Okay. I teach because of that, not because I'm a good person. I teach because I want to learn again. Okay, anyway, back to the stronger scalping hypothesis, where price reacts where liquidity concentrates. Okay, all this is the line where it always happens. Okay, I want you guys to really understand this, okay, because that is all the orders are stacked. All those orders, price orders are stacked around that area. Okay, now here's the thing. Okay, what is scalping? Okay, if you want to scalp with me, if you want to learn about the art of scalping, you need to understand, the fundamental thing about scalping. Okay, I want you guys to really take a screenshot of this section right here. Okay, I want you guys to take a screenshot of this section right here, because if you guys don't understand what is the mechanism, the formula behind scalping, you don't scalp. Because if you don't understand the mechanics behind, scalping turns into gambling. Okay, if you don't understand the mechanism behind, scalping turns into gambling, guys. So we don't want to become a gambler. CZAC say if there's a sudden crash or a black swan event, scalping can be very damaging. Of course, that is why we need to understand, the mechanism and rules, restriction, constraint that we need to obey before we do scalping. All right. So here's the thing. Scalping is an aggressive trading strategy focused on capturing small price movement. Okay, an aggressive trading strategy focused on capturing small price movement. The move side, right, will only target for 5 to 15 pips per trade. Okay, we only capture 5 to 15 pips per trade, not more, not less. That's all. Okay, and the second thing would be the execution time frame. Okay, all the decision and trades are executed on the M5 chart. We only use the 5-minute candles for trading. Okay, number 3 would be the typical structure. Okay, the stop loss strategy. Stop loss, we're gonna allow 6 to 8 pips, but it depends on the market regime. If the market regime allows me, I will sometimes maximum use 10 pips. That is my maximum. But usually, the stop loss strategy is going to be 6 to 8 pips. Now the take profit point would be 8 to 12 pips. Okay, now here's the thing. I want you guys to remember the risk and reward ratio for scalping is 1 to 1.5 or 1 to 2, right? So you're actually risking 1 to make 50% or 100% from that position itself. Okay, so validation rule. Now this is much more important. Okay, this is very important. What is the validation rule? Now, if price does not move in our favor within 1 to 3 and 5 candles, which is 5 to 15 minutes, we're gonna wait for 15 minutes, which is 3 candles. Okay, if 3 candles and nothing actually move to our favor, what do we do, guys? Right, what do we do? If price does not move in our favor within 1 to 3 and 5 candles, we fucking close the trade. Okay, because we need to respect our trading strategy. So CZAC asks, does scalping take a lot of time and mental energy? Well, if you don't know the rules and if you're not our student, well, it takes a lot of mental strategy. But if you are part of the community and then you come here to learn with me every time, and then you have a mentor, you have a partner to work hand by hand with you, I think you still feel stressed, but you will have, at least you have someone to share and bear the burden. That's my thought, right? There's always a beauty by learning with a bunch of friends and peers, right? We humans are not lone wolf. We need to work together. So me myself, I have Professor Allen, I have Professor Prem, we have partners, I have my own mentors as well in trading. So when I feel stressed, I will talk to them, because I will feel stressed as well, right? So if price doesn't move in our favor within 1 to 2 and 5 candles, we gonna close it, right? So here's the thing. Scalping depends on immediate reaction to market condition, which means that if there's no reaction, we don't have an edge. Okay, when the price hit the key level, if it doesn't have the market reaction within 3 candles, we don't have an edge, we're gonna close it. All right, so that's the thing. Now, today's strategy is very simple. Today's strategy is gonna be intraday key level scalping. This is what I'm gonna teach you. Okay, we're gonna wait for the price to to reach a higher time frame key level. So where the liquidity is most likely concentrated, and this is gonna be our core setup. All right, we're gonna wait for the price to reach a higher time frame key level, and then when it reaches there, we are using a hypothesis where the price will have reaction. We're gonna scalp around the key level. Okay, so we're gonna execute on the M5 chart, and with a disciplined approach. We are not trading random price movement. We are trading reactions at clearly defined levels, guys. That's why I say condition over conviction. You don't use conviction only. If you use conviction only, you're gonna gambler. If you use condition, which is what I'm trying to teach you right here, you are a trader, right? So condition over conviction, right? We are not trading randomly. We use certain kind of condition to trade. Okay, so guys, what is a key level? Simple, I already revealed to you. Previous high and low, strong breakout origin, higher time frame support resistance, session high and low. So why it matters? Because usually this is where all the cluster orders is gathered right there. So it leads to a higher probability of price reaction. We are scalping noise, we are scalping price reaction. So guys, This is the most important part of the entire briefing session that we're gonna have today, right? It is, we're gonna set rules for you, we're gonna set rules for me. Okay, guys, I want you to really pay attention for this session because we will obey rules, okay, during this session. So it's like buckle up the seatbelt, okay, buckle up the seatbelt and obey the rules, okay, invalidation rules. So here's the thing, rule number one, we do not enter, repeat with me, we do not enter a fucking trade unless the price reach the defined key level. We are not gonna hallucinate, we're not gonna convince ourselves that it reached the level. If it didn't reach, it's just yes or no. Is it reached the level or didn't reach the level? That's it. Got it? And we do not enter unless there's a visible reaction. Okay, maybe it's a rejection or a strong candle close. Got it? And risk can be defined within 6 to 8 pips. Okay, that's it. Okay, now we close the position. We close the position if the price trade beyond stop level, and we close the position after 3 and 5 candle price has not moved for 3 to 5 pips in our favor. So we wait maximum 15 minutes. Okay, after we close, open the position, and we know if opposite structure forms as well, we're gonna close it as well. That the force is gathering with us. All right, guys. If you are ready, we are going to start our trading session today. Now, before that, I'm going to tell you guys today what is the focus of our pairs. Okay, today we're going to focus on 3 pairs. We're going to focus on Euro US dollar, GBP USD, and USD JPY. So why do we want to focus on this pair? Well, it's easy because it has low cost, high liquidity, and also cleaner execution. More importantly, guys, the reason why we're going to focus on the 3 major pairs, Euro, GBP, USD, is because that I'm taking this session as a warm-up session as well. Right now, I'm actually using this live session as a warm-up session for us to really prepare for CPI volatility for tonight, okay? So afternoon session from 4 p.m. to 6 p.m., we're going to scalp Euro US dollar, GBP USD. We're going to observe, the power of the US dollar. Is it strength? Is it powerful? Or is it weak? So we're going to use this as a warm-up to have, observe the current structure, identify the key levels, read the intraday momentum. And then more importantly, you need to understand tonight, New York time, 8:30 a.m. and 9:30 Singapore, Malaysia time, PM, is where, the US government actually gonna announce consumer price index, CPI, right? So it is an index data that measure inflation in the US economy. It directly affects the interest rate decisions, influence, US dollar strength. So for tonight, from 9 p.m. to 11 p.m., we are gonna really, we are gonna start at 9 and we're gonna brief together, analyze the market together. We're gonna talk together, and then we're gonna see what is the market reaction at 9:30 p.m. And I'm gonna teach you how should you read CPI data so that you can use it as a fundamental analysis signal for you to trade in the market. Sounds good? Okay. So tonight, this session serves as a warm-up session for tonight's session as well. I'm gonna see you twice section today. One section from 4 to 6, another section from 9 to 11. Okay, so guys, don't miss me that much. I will come back. Okay. So anyway, before we really start, professional risk reminder. Okay, guys, today for me, I will be using 5 to 10 lots. I need you to understand. It means that for me, my account size for scalping, I'm gonna expose $50 to $100 per pip. Okay, so because the position I use scalping, which means I use bigger lots to do that. Now you need to understand, it means that if the price move 10 pips against my position, I'm gonna lose approximately $1,000, guys. So this is not suitable for small account holders. So if you guys have a small account, $100, $300, $500, this section is actually not for you to participate, but you can watch and learn. Okay. So this session is for life. You want to learn, you want to understand key level execution, you want to, borrow the lens of a high probability hypothesis, feel good, sit back and relax, guys. Okay, guys, are you guys ready to watch the market, analyze the market together? If you guys are ready, click now. Type in now in the chat box, okay? type in now in the chat box. We're gonna go in to the market right now. We have CZ, LE. Click now. We have 41 viewers. CZ say ready. MD Shaludim say now. All right, guys, we are gonna start right now. Okay, let me turn up some music so that we can really, start to enjoy the things together. This is not the right song. I'm picking the right song for us. Not too high, but not too relaxed as well. If the music is too loud, let me know, okay? This is too loud. You know, when we're doing scalping, the music, the song choice is very, very important. You cannot go for things that is way too loud. If it's too loud, it will hype you up. We're gonna go for some really chill session first. Yeah, we go chill first, okay? We go for chill music, not too loud, because if you get too excited, guys, it's gonna be terrible. Okay, let me close the gamma. All right, now it's time. Guys, you know how I roll. Every time before I start the session, what I do. This is what I do. I take this small little ritual in 3, 2, 1. And then we're gonna start, okay? Let's go. First thing first, if you are familiar with my live session, we already mentioned, we're talking about key level trading. So key level trading means that you need to understand where is the key level, right? When the price create most of the reaction. So I always use a hypothesis that I use from where I do my swing trades, where I trade longer, hold longer positions. But for right now, we're gonna take a look at, I'm gonna teach you guys step by step on how to draw a key level, right? Key level is not as hard as it seems, okay? First, we're gonna use the normal color, okay? Euro, US dollar. Have a good glimpse on what the market is currently going. Well, right here in Euro, US dollar, you can see actually from the weekly chart, right? You have a key level right here. This is what I call a key level, right? Where the price is actually, testing the market, and it always, you have a response. You see, all the way to last year, June, market has been responding to this reaction. This is what we call a key level, right? But since we're trading the 5-minute, we're doing scalping, it means that we are not actually using the price action that is in the weekly to make a trade. Okay, that is not our intention. Our intention is actually to find the key level that we can use as a reference point. Okay, right here, I'm going to use this one. So we have 1 touches, 2 touches. So in order for a key level to be valid, it need at least 3 touches. The candle wick actually, being rejected from that level. So we have 1 and 2 touch right here. And then now we're gonna zoom back to, this area, and we're gonna see, is it something that is valid, based on historical data? Yes, it is. You see, price has been touching this key level for many times. Okay, many times. It means that this level right here is a really valid level that is being, tried by the market many times. So including here as well. So which means that we found ourselves a very strong key level that we can use as a reference point in the from the weekly. So because that it is a weekly key level, therefore I will always do something easier for us to rely on. Okay, so I will always, I will turn the key level into a golden color, right? I will turn it into a golden color. The golden color actually signals that it is a key level that I will be using as a high reference point as my hypothesis from a weekly time frame, right? And then we're gonna go and take a look at, somewhere, from the, okay, we're gonna take a better look for weekly. Is there any potential compression? Let's see, do we have any compression? Okay, we have 1, 2, 3. This is not a valid one. Okay, this is not a valid one, but this one would be the valid one. See this? We need at least 3 touches. So we have 1, 2, 3. So we have a compression right here that I can use as a reference point for me to really, serve as a strong hypothesis for me to consider later on when we are going to the intraday M5. Okay, so right now let's zoom into the daily. We're gonna be patient. Okay, from the daily, there's also a reference point as well. This already have a breakout. Okay, for this one, I'm gonna draw it as well. Just draw it out, don't worry, right? Just draw it out, and then we'll decide later which one is much more better as a reference point. So you see, for this one, let's take a look. It is from last year, and this is from this year, right? So this reference point is actually much more reliable to me. So therefore, okay, I'm going to explain why is it much more reliable to me. Because it happens, last month. So for the market nowadays, I don't really, use information that I gather too long ago, right? So, and you cannot have too many things going on in a chart. So for me, if I were to really, pick one between this reference points and this reference points, if I can only choose one, I will actually use, this one. I will actually use the one that I get from the daily time frame. Because it is new, it means that the market reaction and momentum is still there. So me, myself, I will personally really use this one as a reference point, which means that this is a potential compression level. And right now in the daily chart, we need to spot, is there any potential key level that is still right here? Do we have any key level? We have 1, 2, 3, 4 touches. So yep, guys, this is actually a key level as well. We're gonna give it a yellow color. So all this yellow color is what I call key level, right? This is what I call key level. So key level means that it's the strongest, it's the strongest level that we're gonna use as a reference point. Then we're gonna zoom into the 4 hours, have a closer look. Okay, so Euro US dollar, currently Euro is getting weaker, going downstream, a small bearish trend right here. And then, before we start, we're going to zoom in a little bit closer to take a closer look on the level that is being formed right here as well. So 4 hours, is it still considered a key level? Yes, because we are using 5 minutes to trade. Therefore, 4 hours is still considered a key level. But for 4 hours, I'm going to give it, not the yellow color. I'm going to give it, maybe a green, maybe orange color, to know that it's actually from 4 hours. Okay. Do we have a level? Let me have a closer look. 1, 2, 3, 4, 5, Yes, guys, we do have a level right here as well in the 4 hours. Yep. So 1.18564 is going to be a reliable level from 4 hours. So that's it. Then we're going to go to 5 minutes, take a look at how does, the market is actually performing right now. So Euro US dollar currently moving. Now, guys, remember when you are in the 5 minutes chart, you don't simply draw a level anymore, because to me, it is not reliable. Okay, I don't rely on anything that is happening in the 5 minute chart. To me, 5 minute chart, 15-minute chart is all noise. Okay, it's all market noise. We use it to spot for scalping position, but we don't use it for key level reference, right? So based on our rules today for scalping, we already mentioned we're gonna use only use reference point that is actually key level. Now right now, let's take a look. Okay, moving, the volatility is a little bit slow, not much, moving in a very slow way. Let's take a look at the 1 hour. Okay, guys. So as I promised, we need to obey the rules. And as I always say to you guys, we are traders, we are not gamblers. And me, myself, we need to obey the rules. And I want to show you guys something, again, to really revise on the rule that I mentioned just now with you guys, okay? Let's take a look at the gamma, okay? We mentioned just now during our session, we say something like this, okay? What is the rule? What is the rule that we must obey? So this is non-negotiable because we are risking big money. I'm risking big money as well. Yes, I hold a 6 figures portfolio, but it doesn't mean that 4 figures didn't mean a thing, guys. $1,000 is still money, right? So for me, even though that I'm willing to lose that money, it doesn't mean that I'm gonna burn that money. That's a big difference, okay? So I want to revise with you guys, okay? We do not enter when if price reaches unless the price reaches defined key level, unless there's a visible reaction, unless the risk can be defined within 6 to 8 pips. But right now, to us, it seems like Euro US dollar is not moving in a situation that is favorable to us. Okay, therefore, for me, my honest conclusion to you guys, unless the price actually touches around this zone, let me find a golden entry zone. Okay, we're gonna spot for a golden entry zone that we want the price to actually went from this zone, go to touch here, okay, and then goes down, where we can actually scalp a short position right here. Anyone with me? So this is the zone that we are looking for. But for now, Euro US dollar is actually not working in our favor yet. Well, therefore, we're gonna look for the golden entry zone right now to see is it relevant or not. Now, for a reliable trigger point, if you're trading the 5 minutes, okay, a reliable golden entry zone, I would say, is actually from the 1 hour. So I'm gonna use the 1 hour as a key level entry point for us. So right now, let's zoom in and search for the trigger, like a gun, okay, where you can really do that, okay? So let's take a closer look, okay, where we're gonna look for a reliable entry, golden entry. 1 touch, 2 touch. Remember, guys, a solid key level is always minimum 3 touches, okay, 3 touches. So if there's no 3 touches, we don't consider that as a key level. So we have like 1, 2. This is already a price being closed. Nope. Let's take a look at this section right here. One, 2, 3. Yep, we got a much more reliable one. Yep, it's around here. Okay, the price is actually around here. So let's take a look at the 5 minutes. Okay, so guys, now right now the price is still moving. Okay, it's still moving very slow. Now for me, if there's no movement right here, for example, let's say for tonight the CPI reports is being issued at 9:30 p.m. If US dollar is going stronger, and it means that they will create a certain kind of volatility where um yeah, where the price is actually still going to go down. But guys, for this section, if you would really want to place a trade, I need the price to move at least um wow, it need to wait until not so fast. You need to wait until like around 8:40 p.m. Okay, need to wait 8:40 p.m. because me, unless the price, there's two entry point, guys. The first entry point would be this one. When it touches here, I'm not gonna do it. But if it spike up right here, I'm gonna take a closer look at this section. Okay, so this section right here is what I call a golden entry zone. It's a golden entry. Okay, it's a golden entry zone around this zone right here. Okay, it's around this section right here, 1.18635. Okay, but right now for euro US dollar, my thoughts, nah, it's not really moving. So guys, I'm gonna leave you guys a note so that you guys can actually refer back. I'm gonna put it here, and then for this one, I'm gonna use it as, I'm gonna draw an alert. Okay, and I'm gonna pay attention. I'm gonna put an alarm here as well. Okay, I'm gonna put two alarms, one for this one, so that I'm expecting the price to actually, yeah, to put it here. So guys, I'm gonna leave you guys a note for euro US dollar, with my AI assistant, so that you guys can actually, refer back to what I'm talking about. All right, chat. So please help me to write for my student a note. It's a trading journal note for them to understand my analysis of intraday key level scalping. So we have, in euro US dollar, a few potential key levels, which is good. But right now, it seems like the market is moving in a very, very slow situation where it is 4:53 p.m. and the golden entry zone will only emerge around like 8:40 p.m. laterwards. So we are paying close attention where the price will hit, a intersection golden entry between, a pressuring bearish triangle, and also a price level is from the 1 hour, which is 1.18635. And when the price actually touches, the interconnection between the golden levels that I draw from a higher time frame, and also a key level that is cross section with the 1.18635, I want all my students to pay attention. So set an alarm right there, and we'll see how it goes. But this one, as for now, just be patient, stick to the rules. That is for euro US dollar in 4:54 p.m. right now. Thank you. Please write it. All right, guys. So while my assistant is writing the note, I'm gonna take a screenshot for you guys so that you guys can understand the overall setup. Okay. Euro US dollar. Okay. Okay, guys. I'm gonna share it for you guys. Okay, guys, I want you guys to take a look at the note that my AI assistant provided and say noted if you get what I mean. Okay? Say noted if you get what I mean. 1.18635. It's gonna happen around like okay, currently US dollar is kind of weak. It's kind of weak right now, but it's okay. Let's see what happens. Well, you're welcome. You're welcome. Okay, so we don't force the trade, and I always, try to remind myself the difference between like decision based thinking and outcome based thinking. And for me, to become, I'm gonna share with you guys my personal struggles when I grow as a trader. So my personal struggle is this. I sort of like back at those days, 5 to 6 years ago, I'm lack of money, and that is during COVID time, where I lost my job. I don't have any money in my bank, rentals, landlords, mortgages, all those phone are calling, banks are calling, mortgage, cars, want the every time there's a money, the saving is being pulled everywhere, by the bank, everything. It was a very depressing time. And my toughest challenge as a trader is when you have so little money, you only have like few $100 or few $1,000 in your bank, and then you need to wait patiently for you to actually grow that account. It is tough. I won't lie to you guys. It is really tough. It is not easy for small traders to grow small account. Like if you watch YouTube, if you watch any trading guru, and then they will teach you how to actually um, build and grow your small account. And I want to tell you, it is pleasure to hear, but it is not easy to do. Because when you have a small account, you will always think to yourself, when can I actually use trading to escape the rat race? When can I actually use trading to pay for my bills? When can I use trading to bring my wife, my girlfriend, to travel the world? And when you look at a small account and you and you and you look at the little peeps that makes you like few cents, few dollars, and you were thinking to yourself, how can I pay my bills with this one? And that is the part where I struggle the most as a trader. I struggle a lot until I finally understand what is the difference between outcome-based thinking and decision-based thinking. And then I start to pay more attention on the decision, my money, my profit, and my portfolio start to grow. It's because that I train my mind to don't think from the outcome. Because if you think from the outcome, you won't have the heart to trade, to grow. If you think from the decision, you think from the progress, which is what you're looking right now, you will have the patience. You will have the patience to actually, grow, to grow the account, right? So guys, let me take a note because I always have this some of the habits, you say good habits or old school habit that I developed, back at those days, which I always try to really, remember something that's important. Okay. Okay, guys. So 1.18, currently price is moving towards. There's a small little spikish candle right now. If you take a look at Euro US dollar, it's actually moving towards here. But we won't do anything unless, the price actually went from here to here and then here, right? So we won't do anything unless it crossed the section. So to me, that is my bottom line. even though that is crossing the horizontal line already, but still, I'm gonna pay attention later on. Don't force trade, guys. We only pick the highest probability trade to short it. Okay, if it reaches here, I'm gonna set a short position somewhere around this place. Okay, a golden entry point. Okay, this is the golden entry point. Okay, and we're gonna risk 10 pips to make around 1. That would be enough. Okay, that would be enough. And for this one, my position size will be 50% smaller than my actual one. If I spot a really good entry, usually I will go 10 full lots for this one, but for this entry, I will just use I will just use 5 lots. Okay, and right now, guys, I want you guys to pay attention. It is actually crossing the level right here. Okay, where we're gonna pay attention right now. Euro US dollar, guys, are you guys still with me? Euro US dollar, the price is actually pushing up for the golden entry, and I want you guys to pay really close attention on this movement. Okay, if it touches somewhere around here, we're gonna do a short trade. Okay, if it touches, we're gonna do a short trade because it's qualified as, you know, a golden entry zone as well. Okay, if it touches, guys, all right, guys, do a short trade right now. Euro US dollar short. Okay, do a sell stop right now. Sell stop Euro US dollar, new order. I'm gonna do 0.5. I'm gonna do like 5 lots. Okay, 5 lots. Do a sell. All right, sell. Okay, sell. Okay, for this one, I'm gonna do 5 lots. Okay, because the size of the risk, you know, it's not really in our favor yet. So instead of 10, I'm just going for 5. So guys, short it. Okay, short it. Okay, cool. So we're gonna aim for around like 8 pips where the market actually move. And now we're gonna wait for like maximum 15 minutes, which means that we're gonna wait for another 3 candles to see if the market is actually moving in our favor, right? Remember, we have a 3 candles rule, where right now I'm gonna wait for 1, 2, 3, which means 15 minutes from now onwards. Currently it's 5:03 p.m. So I'm gonna wait for 5:18 p.m. and then we're gonna see should we continue the position or not. All right. I want you guys to remind me at 5:18 p.m. So remember our 3 candles rule. Okay, guys, if you know what I mean, say noted. All right, remember our 3 candles rule. Okay, let me go to the trade section and let's do our stop loss as well. So maximum, we did enter at 1.18639. Input 639, let's be precise. Okay, we enter around here. Late entry is fine. So we're gonna do a 10. Okay, around a 10 pips stop loss. And then we're gonna do like 1 to 1. As well. Candle number 1. Okay, let's step the stop loss. 1.1739. Take profit section at 1.18539. Just a moment, I'm going to tell you guys my setup. Anyone already placed the trade, please show in the group so that we can monitor each other, guys. Okay. Okay, please help me to write a note to my students. So this is actually where we're gonna actually tell them I've already opened a position. The reasoning behind that is because that it had already reached to a certain golden entry point. Although it is a little bit laggish of the price, but still it's acceptable because the price actually touches the golden entry. So here's the stop loss strategy and also the TP strategy. And help me to write a simple note to remind them we're gonna wait until 5:18 p.m. 3 candle close so that everybody can exit if the market is not moving in our favor. Okay. All right, guys. Anyone already placed a trade? Please show it inside. Show it inside the group. Thank you. Okay, so 5:18 p.m. If it's not working in our favor, we're gonna close it. Okay. So let's chill for a while. Okay, let's chill for a while. Okay, let's chill for a while. Let's change the song. Yeah, same, Carlo. I opened the trade, but it's also a bit late as well. Same goes to me, but that's the thing. We can't have perfect entry because of different brokers, different kind of time zone. That is just a part of the miserable thing about trading. A little bit of imperfection in trading. I understand that. $5.18. Remember to set a reminder. All right, guys, let's take a look at the other, pairs while we wait for this candle. And I need you guys to remind me 5:18 p.m. If the position is really not moving in our favor, we're just gonna close it. Okay. Okay, we're gonna close it. If 5:18 is not in our favor, we're gonna close it. So right now, let's go back to the same logic. Great Britain pound, GBP US dollar. But overall, let's take a small view. How is the US dollar actually moving? US dollar is actually kind of weak, right? It's really kind of weak right now. Euro is actually um yeah. Let's take a look. Weekly. Long Wang, let the bullet fly. Okay. Same idea as well. What we're gonna do is that we're gonna really write the range. Is there any range? Is there any range? To be honest, for GBP US dollar, slightly chaotic. If you really pay close attention, it's not a really nice structure that I like. If you compare with Euro US dollar, I mean it is way more smoother. GBP USD. But anyway, we're gonna spot the key level. Stick to the plan. GBP US dollar. Let's take a look. Spotting a key level first. A key level doesn't earn the yellow color if it's not valid yet. Okay, so this is the thing. So right now we're gonna draw the key level where the price had huge reaction. Well, it did have a reaction right here, but it's actually a level that is from few touches, solid one right here. Is there any level that is actually serve as a resistance line? Yep, we have a level. So I'm gonna erase this one. So we have a level in a weekly time frame for GBP US dollar. And I'm gonna put a yellow line for this one because it's actually from the weekly zone, which is a relevant one. And right now we're gonna also draw a level that might be, serve as a really good reference point as well. Okay, I'm very, very precise in this, week thing. It's just me. I know that somebody just don't really care that much, but for me, I just wanted it to be precise. I want it to be like, I want it to be just look good. Some people call me that the OCD, but still, that's just part of me. Now, before that, let's take a look at Euro US dollar. How is it going? How is it going? Still very slow. Is it going in our favor? Still very slow. Right? Trying to break it out here, but one or two candles. We're gonna wait for one more candle. So 5 more minutes to go. If it's not really moving in our favor, we will just cut the losses short. Okay, we'll just cut the losses short. Okay. One more candle to go. No hope, no nothing. Okay. What happens after I close it has nothing to do with me. And sometimes if I want to really hope that the market is moving in my favor, if I want to hope it, that is not scalping anymore. So I always use this to remind myself, where the result has nothing to do with me. And my brain is always trying to think that the result has everything to do with me. But the truth is, it does not. So it's like a constant battle between, outcome-based thinking and decision-based thinking, where the decision-based thinking is always telling you something like, what happened later has nothing to do with you, bro. And the outcome-based thinking that is telling me that, fuck the rules, don't wait, don't, maybe later it will move there, maybe, maybe what if you close the trade and then it start to go down? Well, that is outcome-based thinking, right? So as a trader, it's always a constant fight between this decision-based thinking and outcome-based thinking, where you respect the decision. After 3 candle you close it, cut loss, and where another side of you is hoping the market will go to your way. So this is the toughest thing that you guys actually encounter as a trader. I understand that even right now, still after 6 years of trading, I still feel that, I still feel like I don't want to follow the rules. I still feel like I wanna like, maybe I wish that maybe the price will move. What if I close the trade and then it didn't happen? Yeah, I feel it. I understand what you're all going through. But guys, I tell you, in order for you to compound and really grow your account, you've got to accept the reality, because it is just, what is trading? Trading is actually seems, trading is actually where you wait, you sacrifice a small losses, all right, a small losses, and you wait for an asymmetric position for you to really win big to cover your losses, right? So that is what I'm trying. So what is happening in the chat box, right? Sari say the ES and automated system, Grace Tomia. Alan says it seems that you are a beginner. It is a tool that can make you money. All right, guys, chill, chill. We are in the same community, right? Chill. Okay, 2 minutes to go. Should we actually close it if it's not moving in our favor? It seems like the market structure is going in our favor, but let us see. Okay, let us wait a little more. Wait a little more to see. Two minutes. Okay, guys. It seems like the market is working in our favor right now, but we need to follow strict rules. So let's just wait. The time is gonna be 5:18, where we're gonna decide where we wanna follow as well, right? So I'm gonna remind you guys, okay? Countdown 5:18. Okay, 1 minute countdown, guys. Nice, starting to move in our favor. Okay, it seems like it's going down already. Are you guys with me? Okay. This is the beauty about trading, right? You follow the rules and then you see, is it actually moving in your favor? So right now, it seems that it's moving in our favor a little bit already. So we can wait. Okay, right now in this situation, we're gonna wait for another, we can wait for, well, it's valid, it's going. Right, it's actually now flying, right, guys? I'm gonna show you guys in the chat box. Okay, guys, so right now we're gonna wait. Okay, 5:18 is the three candle rules that we follow. Okay, where we decide, do we want to close it? But right now, guys, the force is with us. The market is actually traveling with us. So right now it is valid, guys. Show me your profit. Show me your profit if you make a profit right here. Okay, all right. Okay, nice, 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 nice. Okay, now what I want you guys to do is simple. I want you to move, okay, I want you to move the stop loss to 1.18689. All right, 689 is where you actually, adjust it, because it seems that it is not really in our favor. So I want you to move one. I'm going to move my stop loss to 1.8, into 5 pips, 1.8689. Okay, so move stop loss, guys. Move stop loss. Move SL to, okay, right? So 1.18689, because it seems if the market doesn't have, the momentum that we are actually looking, so we're gonna stop it, move it. So we're gonna like cut it to 5, 5 pips. Okay, it's cut your losses short, right? Because if the market really want to move in our favor, it already moved. But right now, it has that momentum, but still it's not good enough. Okay, so the expectation is gonna be managed right now, where we're gonna, form from 1 to. I'm gonna adjust my TP as well. I'm gonna adjust my TP to minimum here. Okay, so TP adjust to 1.18564. Okay, we're gonna aim for only 5 pips. Okay, it's fine. Okay, we're gonna only aim for around 5 pips. Okay, one eight 564. wait. Okay, guys, adjusted. Okay, for now, let's just wait because it seems that the market is still, moving in our favor. So after the three candles, this is the rule. After three candles, the market is moving in our favor, right? I want you guys to really learn from me, not only just scalp. You see, I'm going to show you guys something very important. Okay, very important. We say that, we do not enter, we close after three M5 candle price has not moved at least 3 to 5 pips in our favor. But after 15 minutes, it's actually moving in our favor. It means that, the structure is still in our favor. So when the structure is still in our favor, we allow it to actually, still keep on trading. But what we do is that we're going to expect our expectation in the trade, right? So right now, this is the latest one. So right now for this position, I'm feeling safe. I'm feeling secure that, the market is actually moving in our favor. And I think that is okay for us to just leave it right here. So right now it's safe for us to just, put a yellow one where we actually is already letting the position size float. So right now it's okay already. Now we can actually go to analyze the other. Okay, because right now let the market do its job first. Euro US dollar is doing its magic already. Okay, this is the adjusted thing. Okay, now before that, just a moment, guys. If you have a note with you, remember, always try your very best to do your homework. Okay, always try your very best to do your homework. For me, even though that I'm still, I'm teaching, but I'm also learning at the same time. So for me, I still, enjoy every minute of me coaching and learning at the same time. So it is just so fun. So, okay. Okay. I still take my notes, guys. I still take my notes during a setup. And every time when I do that, I will try my very best to really understand myself. How do I think? How do I actually, structure myself during times that are turbulent? So yeah, prepare a trading journal. I know that it's old school, but still, it is something that is extremely grounding and rewarding by doing that because you always growing. The fun part about trading is this, is really this. Okay. Now, Euro US dollar, what do you guys think about it? From a macro point of view, it seems like US dollar is, kind of weak. People have high expectation on Euro, even though the US rates is higher than Euro, but still people have, certain kind of expectation for Euro as well. Let's take a look at JPY. So what I do is that sometimes when I trade, because when I'm trading the market, I'm on live stream, which is I have audience, and I'm using my very own account, which is risk. And at the same time, I have my internal friction, which is, the outcome based, decision based, is constantly, fighting with each other. And how do I manage myself is like a stress, but I always use this as a checkpoint. So when I start to feel like too nervous or starting to feel like, the nerve is going, what I do is I remind myself every single moment. It's like a checkpoint, right? Where I do it this way. And then I breathe, and then I move on. Right? Because I'm human, I'm not a robot. So that is the reason why I always have this little thing in front of my desk as like a little checkpoint to remind myself, forget about Euro US dollar. After I place the trade, I always want to go back and take a look. Am I profiting? Am I losing? Yes, I do have that urge as well until today. Even though, 6 figures portfolio, but money is still money. And if you guys, been poor before like me, where you don't have any more money in your bank, you understand every single cent is precious. Agree? So hope that you guys can really feel that with me. We can grow together. So let's take a look at GBP US dollar. Now the next thing we want to do is to spot a level that is relevant, that makes sense. Okay, so usually when this kind of structure form, I don't take this as a consideration anymore, because I always gonna take, the latest structure as a consideration. After all, we are trading 5 minutes, so I don't use, this as a reference point. Okay, but I'm definitely gonna use this one as a reference point. You see? Okay, two signal going on in GBP US dollar. First thing first, you need to understand, if you take a look at the daily chart, there's a very, 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 obvious range is being formed right here, which is what I call the balance zone, right? This is the balance. Is this the balance? No. Take a closer look. Where is the balance? If you take a closer look, you understand the balance is somewhere around here. Yep, somewhere around here. So this is the balance, okay, where the price is actually agreed to being absorbed, okay, is being agreed to absorb back to this zone. Slightly chaotic, but still it is a balance zone. So right now there's two signals. Signal number one would be the hypothesis that I always rely on is that price always prefer to go back to the balance zone instead of continuation. Signal number two would be the price after it tried to break through, it will have a pullback, right? Pullback, and then it try to come back again, and then pull back again. So it's sort of like a sponge, guys, like a sponge. What do I mean by sponge? Okay, it's like a little sponge, SpongeBob, right? It's always want to absorb back. What is a sponge? This is a sponge, guys. This whole thing is a sponge. Okay, what is a sponge? Where it always tries to absorb all the price, the pressure back to that zone where the market is actually, much more preferable to trade at, because there's stakes there. So you see there's two signals being absorbed back to this zone. And another one would be having a short, a little bearish going on right here. A little bearish going on right here. Somewhere around here. Okay. So forming a compression. Is it a good opportunity to trade? Not that soon, okay? Because we are in a phase where we are doing key level mapping. So key level mapping is not an excuse for us to trade. But right now, based on the compression, it is actually much more, high probability that the price will actually drop here, climb out, drop here, climb up, drop here, climb out. Get what I mean? So this is actually a much more higher probability zone where we can actually make some profit scalping around this area. So this is our playground, our gold mine, okay? Before that, let's take a look at our Euro US dollar for a while, guys. You see, I still want to take a look at it. I still want to take a look at it. I still want to take a look at it, guys. It's not that I'm, become a robot. I still want to take a look at it. It's still money on stake. So yes, I'm a human. I'm a human, I'm a trader like you guys, and I want to make money and don't want to lose money, guys. Everyone still with me? Are you guys still with me? I hope that this live session don't bore you, because I'm not hyping myself out, but so far so good. The golden entry point is still making the profit. And yeah. Yes, it's moving. It's moving. So anyone making profit right now? Because I'm okay to lose, guys, but I don't want my student to lose money. Anyone making profit? Did anyone enter this slot right here with me? If you are, please show profit. It makes me more. You give me that confidence, to teach and to really, become a better teacher. So let's take a look. Let's get back to the GBP US dollar. Don't You guys need to interact with me, or else I always want to go back to the Euro US dollar and see, don't. You guys are my teacher as well. Sometimes your teacher, your mentor is also, the hand is also will itch, want to break the rules. And because part of the reason why I want to become a teacher is because becoming a teacher, it makes you more disciplined. Agree? Right? Why I want to become a teacher? Because becoming a teacher, you guys, you thought that I'm the one that teach you how to trade, right? But the truth is, you are making me a better trader. And I really thank you guys for that. You guys are making me a better trader. Why do I say so? When I'm trading myself, I'm just me and myself. It's just me and my money. But when I'm trading with you guys, I need to stay disciplined in front of you guys. You get what I mean? I need to be content. I need to be stable. I need to be disciplined in front of you guys. I need to be an example, a role model for my student. And when you have that kind of pressure, it actually turns you into a better trader. I don't know why. So for me, every time I enjoy trading, I enjoy teaching, is because teaching allows me to become a better trader. So that is my sweet spot of becoming coaching, why I want to open my VIP group, why I want to have, coaching session, why I want to have one-to-one session with you guys, why I want to have, this RX channel group, Profit in Peace, is because that actually I want to use this to, sharpen my very own trading stance as well. So guys, if you want to learn something outside from trading today, if you want to become a better trader, try something else. Learn something, test it, and teach it to somebody else. I don't know why. Every time you pass on, you sort of like you become a better trader, a better human overall. Okay. Anyway, back to GBP US dollar. Sorry for flowing. It's just my thing. It's just my thing. Let's take a look. 4 hours compression going on. I love this kind of structure. Love it. Where you can see the market is compressed, bam, go here. So this is actually the place where, you know that you can possibly make a short trade, a potential true break right here, guys. Potential true break. Okay. Now, wait, one more check before we go. One more check before we go. One more. I get a little bit too excited right now. Sorry, guys. A little bit too excited where I want to spot for the scalping entry already, but we need to wait for a while. Wait for a while. We need the key level. Do we have a key level? Yep, we have a key level. We have a key level right here from the 4 hours. I'm gonna use this as, I'm gonna mark it as an orange color. Okay, sweet key level right here. Let's zoom into the 5-minute charts. Do we have a potential entry? Okay, guys, GBP US dollar short. GBP US dollar short. Right now. We spot it, scalp it, GBP US dollar short. GBP US dollar short. For me, I'm going for 7. GBP USD short. All right, GBP US dollar short. GBP US dollar short, okay? Entry point, let's take a closer look. Guys, I didn't turn off my presentation deck and no one is telling me. And I've been analyzing the market together with you guys. Come on, guys. Don't do that to me. I've been opening the whole presentation deck and nobody tells me you guys cannot see the chart. Please don't do that to me. If you guys want to learn, you need to remind me. Sometimes I forget because I'm doing so many things at once. And GBP US dollar short. Okay, GBP US dollar short right now, guys. I already placed a position. GBP US dollar short. Okay, put it right here. Okay, GBP US dollar short. Aim for slightly above 10 pip stop loss. 3 candle rules. Remember, for this one, I'm gonna aim for at least 1 to 2, just because I think that the market has the range to do that. So we're gonna short. Stop loss strategy, we're gonna set at 1.36304. Three zero four 36004. All right, guys, remember the 3 candle rules, okay? 3 candle rules means what? It means we need to wait for until 15 minutes, which means that we're gonna wait for 7, 7, 15. Yep, we're gonna really come back at 5:52 p.m. All right, 5:52 p.m. where we're gonna really check it. All right. 5:52 p.m. All right, so we're gonna come back, 5:52 p.m. to really see, what's going on in the market. Is it moving in our favor? But right now, GBP US dollar is okay to really short it. All right. $5.52. 10 pip stop loss. Let's take a look at our Euro US dollar. Yep, still moving in our favor. Yeah, it still has the power. It still has the power for Euro US dollar. Can still wait. GBP US dollar. Let's take a look. Cool. To position. I'm gonna show it for you guys. Take a snapshot. USD JPY. Let's take a look. US dollar, Japanese yuan, same logic as well. We're gonna spot for key level first before we do anything. And right now, let's make it to the color, which is the normal color. We don't give it any credit yet. And we're gonna see where the price is being rejected historically. So here we have 1, 2, 3, 4. Yep, that's a reliable one. But I like to be precise, when it comes to writing I like to be really precise on this one, because the reliable key level increase your probability of good conditioning and decision making. So yep, we do have it. But is it a range? Well, if you really don't want to take a look, the true range of USD JPY is actually here. Not here, not here, but here. This is the range. It's actually the range. Oop, OBS Studio disconnected. So we're not gonna use US dollar, Japanese yen, but first let me take a look at the three candles rule. 552. Ooh, it seems that Euro US dollar is not moving in our favorable position. Wait. Yeah, it's safe, it's safe. It's still a structure that is reliable for us. Looking from the macro point of view, it's still okay. But let's take a look at US dollar JPY. Is it reliable? US dollar JPY. Well, this is a range. It's a very long range. We're not going to use this range as a reference point for 5 minutes intraday scalping, of course, but it's better to know that over what is the market regime like. If based on this kind of market range, you're probably going to have have a good sense that what is the market regime, right? It's actually a market that is kind of bearish, to be honest. It is bearish because that what I say is like this range is served like a sponge that trying to absorb the price back to the middle. The part where I don't like about this regime is that it's already moved, right? A really good entry point for USD JPY is actually here, but now it already moved, so it moved to a place where it's not really reliable for us to trade anymore. If we really want to look for the really good golden key level to wait for that kind of price action, it would be the price when it's traveling around here, like it's actually playing around here, this section, but it's already moved too low. So for me, US dollar JPY, I don't really get it. I'm gonna give it one more chance. I'm gonna give it one more opportunity to see does it have the level that I need to really serve as a good golden key level for us to trade. But if not, I'm gonna pass. Yeah, I'm gonna fold, guys. For US dollar JPY, I'm gonna fold, right? So US dollar JPY fold. I'm gonna write. All right, chat, please write for my student. I'm gonna fold, FOLD, fold for US dollar JPY. Now there's two very obvious reasoning, and I want every one of you guys to actually learn from folding as well. Not every time is about entry. Not every time is about opening a position. I think it's much more important for you guys to learn how to fold as well, just like playing poker. Now, the reason behind I'm folding US dollar JPY is simple. We are using golden key level from higher time frames such as weekly and daily to really spot where is the price currency, currently balancing. And right now, if we look from a weekly, macro point of view, the price has surely moved from, $156, and then it goes down back to 153, playing with that little line right there. And it's already far away from the level that's relevant for us to serve as a key level to trade. Right now, the market is indecisive. It's not, forming any really obvious balance that can serve as a reference point. Balance means that it is an obvious sideways. So we fold US dollar JPY is because that if it cannot produce a reliable market regime for us to rely on as a key level, we cannot use it as a reference point for our intraday trading. If we don't have a good reference point from weekly, from daily, it means that 5 minutes itself is full of noise. You're basically not trading with probability, you're gambling with noise. So this is my opinion for US dollar JPY. I'm going to show you guys a snapshot for this setup, and also this note I will send to you guys after my assistant done with the writing. Okay guys, now move too far away, so I'm going to fold, and I'm going to show you guys this little section right here, right? Fold is actually important as well. Not every time it's about trade. If everything is about trade, guys, we are just gonna gamble. Okay, guys, so here's the note for you guys to take a closer look. Why do we fold US dollar JPY? I want you guys to really understand. It's not only about scalping. It's also about, I'm using this scalping session to teach you guys about how mature traders, okay, to actually choose when not to enter the market. I want you guys to really pay close attention on why I fold US dollar JPY. And if you guys understand what I'm trying to say, click noted, okay, in the chat box, so that I know that you guys understand every single thing that I say. We're gonna fold US dollar JPY. Okay. Currently we are down in GBP USD, so we still have around like 10 minutes yet. So we're gonna take a look at Euro US dollar 5 minutes to see, is it, the market is not moving in our favor. It's always good to double check it. Yep. All right. So because we've already adjusted for Euro US dollar, and I'm not gonna touch it, I'm willing to take that risk, which is 5 pips, which is 5 pips of of 50, 50, yeah, 500, 505. So, yeah, so it's around like 2000, yeah, 250. So I'm willing to take that risk of 5 pips in exchange for the potential profit that is still available for Euro US dollar. So right now, I'm just gonna leave it. I'm gonna let market do its thing. If it's being cancelled out, stop out, fine. It's just part of trading. If it's flow, it's also part of trading. I've already did my thing. It is unnecessary for me to keep on coming back to take a good look at the market, because we adjusted the stop loss, we adjusted the take profit point, and the market is currently still moving in our favor. Now, there's one thing that I will actually, really pay attention on. If you know, if the market actually, well, to be honest, if the market actually breaks, nah, nah. I was trying to say if the market is gonna break somewhere around here, and then I'm gonna like cancel it, I'm gonna like invalidate it. But I sort of like, remind myself that in the 5 minutes M5, all the levels that you draw is basically formed by noise, so it's unreliable. So currently we are actually using, the key level around this section as, as our hypothesis, right? So I'm gonna, use this hypothesis until the very end. If you guys, really control your position, I highly recommend you to don't touch it. It is still a relevant position to hold. Yeah, that's probably it, for Euro US dollar. So quick recap. All right, quick recap on GBP USD. Am I being stopped out? Are we being stopped? GBP US dollar being stopped out is fine. Okay. So GBP US dollar stop out right here. Let's do a further analysis together before I close. Quick setup, my thinking on all right, so here's a short reflection on the Great Britain pound loss that I took. I opened 7 lots for this position. Well, the lucky part about this position is that initially I want to like open 10 lots, but I think it is slightly too volatile for me to put 10 lots. Therefore, I go for 7 lots. Now, the market proved me wrong. The hypothesis is being broken, but still, there's something that we need to reflect, which is when we enter the market, there's a little bit of price leakage where the actual entry position is 1.36230. But when I hit the sell button, it is entering at 1.36204, which is a huge, like 26, 26 pips of the range. So is it still relevant for me to open another trade to give it, a shot to hedge the loss? I think, it's not hedging anymore. Still, because it's a golden entry zone that is highly reliable to short it. So I will still put a sell stop position at 1.36230 and expect to ride the momentum back to TP to cover the loss. So for this one, I'm going to use 8 lots for my next position, just to cover the loss a little bit and also give it another chance. So here's my, after the loss, I think GBP US dollar still worth another shot, guys. So for this one, you can remove it. And I'm going to give it another chance around here. Okay, I'm going to give it another chance. I enter it too late just now. Too late. So I'm going to give you guys some notes, about this loss. There's still a potential position, but guys, if you don't have, you have a small account, please don't do this yourself, or you will really hurt your capital. Okay. Well, that's a loss, but still, it's okay. For GBP US dollar, it's still worth to give it one more shot. So I'm gonna really still open, a sell stop at 1.36230, and I'm gonna do a sell stop and wait to ride the momentum. This time I'm going in early. GBP US dollar. I'm gonna go for 8. Okay, market execution. I'm going for sell stop. So the price is gonna be 1.36230. Okay, so place sell. I'm gonna do a sell stop at 1.36230. Okay, expect to ride the momentum all the way down here, and until TP point. So I've placed a position at 1.36 already, and now let's see how it actually flows. Okay, because it is still a really good structure for me to lean on as a hypothesis. And the stop loss strategy, still I'm going to set it at 10 pips. So the stop loss strategy is going to be at 1.36330, 1.36303, going in for another shot, guys. So if you guys are with me, second position. Okay, GBP US dollar, second position. Give it another shot. It's still a really good position to trade. All right, so yeah, a quick recap for today. Didn't manage to make big money for today, but still Euro US dollar profiting, I think is kind of good. Euro US dollar profiting, and let's take a closer look. I'm gonna let it float until hit TP. I'll let you know how it goes later on. But for now, GBP US dollar position has been open, and we'll see how it goes. Let's see the hypothesis work or not. Now, before we end our session, a quick recap on our session. Okay, now quick recap. Did we actually follow today's trading strategy? Did we? Did we follow our trading strategy? Yes, we did follow our trading strategy. I show you we only rely on intraday key level scalping, and I do what I say what I do, right? So this is actually how I scalp. It's not like buy sell buy sell buy sell buy sell. No, it is all probabilistic thinking. You put into consideration, you try to really understand the market momentum with rules, with conditioning, where you use condition to actually override conviction, right? So I'm a very easy to hype up guys, so I need conditioning to condition myself so that I'm not overhyping. Okay, so today's strategy, intraday key level scalping. I hope that you guys love the session, and stay tuned for tonight, because tonight we're gonna have CPI volatility, where the US government is gonna share about consumer price index. And around 9 p.m. I'm gonna on live again for second session. 9:30 p.m. I'm gonna teach you guys how to really understand what is CPI and what does a rate actually mean to us. So today we're gonna focus on two pairs only tonight. We're gonna focus on gold and also silver. All right, are you guys still with me? And are you guys gonna come back tonight at 9 p.m? If yes, pick yes in the chat box, and I'll see you guys tonight. See you. And before that, section close. Okay,